Okay, so welcome to the second video in this series where I show you exactly how to develop edge on a strategy from the start. As I mentioned, I've never traded this strategy, so it's something that I've seen on the charts, and that, of course, is where you start. So we've talked about the basic idea that we want to build the strategy around in the first video, momentum. So we see the volume come in, we see the prices spiking. Crude oil has fundamentals that are driving momentum. So we want to build the strategy around it. So what are we seeing on the charts? Well, first of all, we're going to try to develop a day trading strategy around this. So let's go ahead and pull up some day trading charts. This was the daily charts. We're going to try and pull up a 4 hour and a 5 minute chart. And the purpose of what we're doing right now is just to take a look at it. What do we see? What is it that we see right now? So it looks like there's an indicator that I've had on here from times past. I'm gonna leave VWAP. I have SMAs. I'm probably gonna get rid of this. For now, I'm going to hide the SMAs and I'm going to make sure to hide VWAP because I just want to start out with simple technical analysis at the beginning. So let's go 4 hour, and I think this one already is. No, there we go. 5 minute chart. Looks like I've got RSI on here. I'm even going to get rid of that for now, just to keep things simple. Okay. Okay, so I've got a 4 hour time frame. Yeah. And I just want simple volume and resistance, or sorry, I want simple volume, and I'm going to do some technical analysis just to kind of see what I can see. Let's start on the daily chart. I mean, we can see that something held up here. The only problem with support lines on momentum strategies, and this is just an experience thing, is you see a lot of wicks. So we had a bit of a support. Like it is hard to draw support and resistant lines on momentum charts. There's a lot of wicks, but we'll do what we can here and see how it turns out. So let's go back to the 4 hour chart. There was some structure. There definitely was some structure here on the 4 hour chart. You can see there's a bit of uh, a, a smaller time frame support and resistance line. I'm going to go ahead and put that in. And I'm just making a different color so that we know it's on the 4 hour chart. And on the 5 minute chart, you can see it did bounce off. One of the things that you'll have trouble with, though, uh, is so this chart develops, right? We drop down here if we look back a couple of days and we're thinking about how we would have seen this in real time. This kind of set up in real time, you probably would have been looking for something like this. You're like, okay, well, there's a trend. You wouldn't have been thinking this as support and resistance. So you find a bit of a trend line here, and then it breaks. So are you looking to follow the trend? This line would not have probably not have existed at the time because we just couldn't. There's nothing in back here in the chart to tell us to put this line in. This line is more based around this area right in here. If this seems unstructured to you, we're just talking about what we see in the charts right now, just kind of what to look for. And right now, there's going to be stuff that we're discussing that's not going to work. So we're going to have to get rid of it and find something that works. So that's what this video is mostly about, is finding what's not working and then getting to a point where we see something that does actually kind of work so that we can back test that. Got to start with coming up with some sort of criteria. Here's what I see. I don't like this trend line. I don't like it. I mean, yeah, it came down and touched us, but in the moment, it's kind of like, how would you know? How would you know that's going to work? The same here. Like it touched 4 or 5 times. It's like, okay, so we had this moment and then we had this moment. 2 points is not really enough to set up a trend line. So we had a third one. Okay, great. So now we've got a third one. Let's say we're going to go ahead and trust this trend. And we take the next spot here. Well, now where are you going to risk off of? You're going to risk off of here. This line didn't exist at this point in the chart, right? Because we said it's based off these future events. So where are we going to risk off of? If you risk way down here, now your risk to reward is way off. You can just visually see like you're hoping to get a one-to-one risk to reward out of this trade. So it's just not really a great setup. I don't really like that. Let's go a little further back in the charts here. I mean, there's definitely some chop in here that I suppose you could have tried to do a range on. But again, it's like, how quickly does the structure develop? Like in here, you wouldn't call that developing structure. In here, you probably would have looked to put this line down here, but then that's not really the way that the chart developed. So I'm not immediately seeing anything in support and resistance and trends um, that would work super well. Uh, where are we here? Oh, we're way back here now. So there is a bit of a trend follow here that could have been done. I mean, it quickly changes character, right? So yeah, like this is all over the place. So this is getting messy. I think we're going to go ahead and stop this now. I don't see anything in support and resistance that really jumps out to me. So let's try something different. Let's get rid of some of these lines, clean up the chart again, and just try something different. Okay, let's bring up RSI. RSI is a great indicator that's commonly used. One of the issues with RSI that's common is it's just really hard to get enough occurrences. The daily chart RSI often is a bit like, where do you get in, right? Because you can get something that comes down. So if you say, for example, here's an RSI moment around 30. So I get in, right? And then it doesn't really go up, and it probably would have come back and stopped you. Oh, this is in after hours. So here's an RSI moment. It comes down to about 30, which could have been viewed as oversold. And if you would have held that, that definitely would have been a win. Okay, so mentally just keep that. Around 30, we had an RSI event that would have worked. Now this day, it did, we had kind of a dip kind of just before the open and into the open, and then it ran. That looks good, but RSI only came down to 43. So it's like, okay, well, where do you get in with RSI? This day, RSI came down to 36. So you might be starting to think, well, in that 40 to 30 range, potentially. and then RSI came down to 26 here on this day. So this highlights the issue with RSI, and this is common. So you want to try to think about it like how would I have been trading this in in the moment? And something I do that's simple is I just expand the chart and then get rid of all the rest of the day. Like how it worked out, try and get that out of my mind just for a second. So I'm trading this at the open, let's say, and it comes down here and it kind of makes this consolidation level, which is good. It's holding up, right? That's good. And RSI comes into that range. It's at 33. Okay, that's good. That's great. But then by 10:30, RSI is now down to 26, and that level has dumped. And it's one of those classic situations that everyone gets themselves into where it's like, I thought I had something, this is holding up. It comes down, stops you out, and then runs higher. That's a classic situation. Are we getting ourselves into that situation by trying to use RSI as an entry signal? It's probably pretty likely that we are. There would have been no RSI signal here. You maybe could have viewed this as one, but I don't like to trade this late in the day if I'm day trading. And again here, yeah. I mean, I don't like what I see with RSI here. You might feel differently about it. I mean, if you wanted to trade this late in the day, there certainly was an oversold signal. But again, right here, you would have had something around 36. If you were using RSI as an entry, you would have got in and got stopped out, and then it would have ran higher. So, I mean, that's kind of what I'm seeing here is a lot of RSI is going to lead to a lot of choppy trading. If you're trying to wait for an oversold condition on the 4 hour chart here, you're just not going to get, like, it's not a day trading strategy anymore. Now you're getting into a situation where it's more of a swing trading strategy, which is good. That's fine. But I can clearly see here that there's just not a lot of occurrences of oversold conditions on the 4 hour chart. So it's not even a swing trading strategy where I'd get a trade every week. It's it's more of a swing trading strategy that you might get a trade every month, which is not what we're going for here. Trying to look for something that's a little more day trading. Okay, so we're going to go ahead and try something else. Let's go ahead and throw up some SMAs. I think I have. Okay, let's see what we've got here on the 5 minute chart. So just so you know, like this is important to do. If you find a breakout strategy or dare I say it, ICT. I know ICT's got a really bad rap among some, but I mean the idea of one example of ICT strategy that has good bones is, the idea of a breakout and then a consolidation or a pullback to the breakout level and then continuation. So whatever strategy you're bringing in, it's important to do this, to just take that strategy down to the bare bones. That's why I mentioned the ICT thing, right? Because just take it down to the bare bones. The idea of a breakout from a key level, a pullback, and then a continuation. And then you start building it from there. You can't rely on someone else to give you everything you need to have a profitable strategy because it's simply not the way trading works. If you want to develop some sort of edge, you need to do the work yourself to find that edge. Even if someone is giving you a setup that they say is profitable, Maybe they've developed edge for themselves on that strategy, and you also need to do it based on what you personally see in the charts. So let's go back. We've got a just so you know, something I also didn't mention here is that I'm probably wouldn't like when I day trade, I wouldn't be trading past noon or even 11 o'clock. Like that's not, I'm coming more for the open. I might do a little bit of trading in the pre-market. I might do a little bit of trading kind of morning-ish, but by afternoon, like I'm not day trading anymore. So when I'm looking for moves, I'm going to be looking for something that happens earlier in the day. Um, I can see here that we held up. So this is an important signal. We held up here, kind of along with RSI there. That's something to note. I can see that when we crossed that green line again, we ran. So that's good. We're kind of following this line, which is probably the 21 period moving average. Okay, so again, it liked to hold this green line, which is our 200 moving average. It kind of broke through, but when it came back, it held right here and then ran. What time is this? 10:25 my time. That's still tradable. I would still trade that. Okay. There'd be no trade here. If we were looking for it to bounce off that green line, there's no trade this day. That's realistic. Okay. If you're day trading, your setup is not going to present with an entry every single day, unless maybe you're a scalper or you're looking at like a dozen different tickers to day trade. But we're going to keep it simple right now. We're just looking at crude oil and seeing if there's some sort of momentum strategy that can be developed off that. Time of day is this? This is 7 o'clock. I probably, yeah, this is realistic to think that I could have traded here and then it ran. That actually was a really good trade if it held up on that green line. What else have we got here? We've got that would be a loser, that would be a loser, but that would be a big winner. There's probably some sort of macro news or something that came out here. Um, I mean, that's still not completely terrible to me. This is later in the day. I probably wouldn't have traded this, but it still kind of verifies the idea. And again, this is a situation where RSI would have confirmed. Yeah. So it didn't break through the green. It bounced off the green. You can see how it's respecting that green line. Like, I'm going to be perfectly honest with you. In any day trading type of strategy that I've ever tried to develop, I've never watched the 200 period moving average on the 5 minute chart. That's not something I've ever been introduced to, but it's pretty hard to deny that just over a few days of looking back, um, it's respecting that 200 period moving average. So that looks like something. So this day, it didn't get anywhere close to the 200 period, and that's okay. Like I said, it's not going to work every day as long as it gives me a clear signal. What I don't want to see is that it's chopping back and forth like multiple days per week. It just chops back and forth over that green line, and it just absolutely does not respect it. And if you tried to get in, you just consistently keep getting stopped out. That's not the good making of a strategy. See, this is good. And again, it follows that 9 period moving average pretty, pretty well a lot of days. Broke out here, consolidated, and then moved higher. This all looks good. Okay. I so when we're starting out, this is not a complete back test, right? I hope that goes without saying. Like this is just brainstorming right now. This is just the beginnings. It's like, hey, what might work? right? And then in the next video, we'll move to back testing the ideas that we have that we saw was kind of working on the chart. And we're going to try to see a little bit more about it. Is this working? How well might it work? Because the back test really only shows you what might work, right? It's not showing you 100% what is working. That's going to come more with forward testing and when you start trading live. But we're just trying to get some ideas right now. So I'm going to go ahead and call this 200 period moving average on the 5 minute chart. I'm going to call that as an entry because I think it works. I mean, we looked back and there's enough information that we have to think, this could work. So let's roll with it. Um, Now we talked about this 21 moving average as possibly a reason to take profits or a reason to stay in the trade, one or the other. I mean, it kind of works here. You wouldn't have really gotten like a ton of profits if you were taking the break down of that 21 moving average. You can see like the move went much higher. You might have kind of got stopped out a little early here. But let's just look back on the chart. See, when we get an entry, okay, so we would have got an, oh no, I wasn't trading that late in the day, so I don't have to look at that. Yeah, so the nine wouldn't have worked great in this situation because you would have lost all your gains. You would have spiked up and then come back down. Maybe you held through this and then you would have lost most of your gains. You could have potentially got in here around 97 and you could have potentially had some profits around 100, $3 on a futures contract is pretty good, but ultimately you would have got stopped out, kind of more or less for break even. So the 21 initially doesn't look great. Again, here, if you had got in the pre-market and rode this up, you would have got stopped out here, and the move actually went much higher. So I'm not liking that. Let's find another occurrence just to keep getting some ideas. Yeah, I don't like this. Let's introduce VWAP's just going to muddy things. It's not much different than the moving averages. Let's try Bollinger Bands. So I'm not going to be looking at Bollinger Bands right now for an entry. I'm more looking for exit criteria because we've already kind of said I want to back test the 200 moving average when it touches it or crosses over. I want to back test that as the entry. So we're looking for an exit criteria. So if we use the top line on the Bollinger Band, we would have exited here. So in this particular case, we got on about 92.50 and we would have exited somewhere around 94.80. That's $2 on a futures contract. That's pretty good. I like that. Let's see if it kind of holds up. We got 88 here and we would have 89. That's a little mediocre, but it's not completely terrible. We have to remember that we have to be realistic, right? If you're targeting a 1 to 2 risk to reward or 1 to 3 risk to reward, you're just not going to get that every day on day trading. Sometimes you're only going to get a 1 to 1 risk to reward. But over 50 trades, do you get a little more and then it kind of offsets and so you end up with overall on average a 1 to 2 risk to reward? We're going to do some back testing and find out. This is a great situation here. You can see you could have risked off the low of this candle and actually, well, it's not that great. It's just okay. It's just okay. We might be able to introduce more criteria. at some point to judge whether we say take half profits at this point and let it run. If it holds up here, maybe it runs another leg higher, which it did. Again, just brainstorming. Hard to tell anything from one trade at a time, but we're just trying to get some ideas. A lot of volatility on this day, but we didn't get an entry. So this is the day when we could have entered in pre-market potentially. 94, 95, another buck. I mean, this is enough for me to start backtesting this. And what I would do is I'd back test it, kind of see where we're at, and then like this where we get wicked out, but it ends up going much higher, I would try to introduce more criteria to see is there something else. So there's three criteria, right? There's an entry that you're trying to develop criteria around giving you confirmation to enter the trade. There's the exit where you're trying to take profits and you're trying to find the average place that results in the most amount of profit over 50 or 100 trades. But there's a third type of criteria that you're trying to develop. Mike Bellafiore talks about it in the playbook, a reason to stay in the trade or a reason to sell, right? So basically, is there a reason to not sell this? Is there a reason to stay in the trade? So right now, what I have is a reason to get into the trade, an entry, and I have kind of a rough idea of a reason to get out of the trade, the top of the Bollinger Band. But is there something that might keep me in this trade longer? I don't have to answer that question right now. I don't have to. All I need to know is that my entry results in some pretty significant runs sometimes. And I do have an exit criteria that I can back test. And as I start to forward test this, I can start to refine this and try to find some reason to stay in this trade, some way to identify something that maybe is going to run. And it could be a small micro trend on the 4 hour chart. I'm not going to start down that road right now because right now we're just still trying to keep it simple. So, what can we see here? Yeah, you might have got out a bit too early if you were trying to. This is not a great, it's not an awesome day for 200-day entry and then trying to take profits on the top line of the Bollinger Band. But if we have more days than not where we have a good, okay, so like something like this, well, that's a bit early for me to get in here, but I think it still supports the overall thesis. I mean, this would have stayed in for three candles, but it ultimately ran. So I think that's where we're at. I think what we should do, what I'm going to do, is I'm going to backtest with the 200 period moving average on the 5 minute chart as the entry. I'm going to backtest it with the top line of the Bollinger Band, either touching it or breaking over it, as a take profit. And I'm just going to kind of see where we at. Here's the thing. If we have a profitable strategy based on that, you can clearly see that there's room to try to figure out how to get more of this profit. And that's where a lot of edge is developed. It's like, okay, let's start with something that works, that has some sort of positive expected outcome. And now over time, let's try to figure out how to identify days when there's potential for this to run higher. Or maybe it's just something as simple as I take half profits here and I let the rest run. And it ends up being a spectacular win. I don't know, but let's find out. I'll see you in the next video. We're going to start backtesting.